Hi, I'm Martin Pring. They say that a picture is worth 1,000 words, but I say that a chart is worth 1,000 pictures. And that's because charts in the financial markets often scream out very important messages that an important or significant trend reversal has taken place or is about to take place. Each month I publish a newsletter called the Intermarket Review, and each issue contains what I call the chart of the month, and that features a market that I think has just turned or is about to turn. So this series of videos aims at presenting these charts of the month. So if you're interested in them, please hit the subscribe button and you'll be brought up to speed on a regular basis. So without more ado, let's go to the chart room and see what's in store for this month.
Commodity prices peaked in the spring of 2011 and have been in a declining trend ever since. The current technical position still confirms a bear market, but there are some green shoots that suggest a new bull market might be about to get underway. In this brief presentation, I'll tell you why I'm tentatively bullish and the things to look for that will actually confirm these suspicions. Well, here's a chart of the Dow Jones UBS Commodity ETN, the DJP. Underneath is a diffusion indicator that measures a basket of commodities and indexes that are above their 24-month moving average. As you can see, it's very oversold, but still declining. Now, I like to see this series reverse direction and cross above its 9-month moving average, but that's not happened yet. However, these arrows show that whenever it hits its -6 level, as it did in November, this is usually pretty close to a bear market low for the DJP. Let's investigate a bit further. This chart shows the DJP together with a ratio of two ETFs. They're the Goldman Sachs Natural Resource and the SPDR Consumer Staples, the IGE versus the XLP. Now, the IGE is reflective of resource-based equities, whereas the XLP comprises defensive early cycle leaders. It's an ideal inflation-deflation relationship. A rising line is inflationary because it means that the IGE is outperforming its XLP counterpart, and vice versa. The chart also reveals that most movements in the ratio are closely tied with those in the commodity ETN, the DJP. That means that when it's possible to see a joint trend line violation like these, the trend of the DJP typically reverses. Currently, both series are below trend lines. Here's the one for the ratio, and this is the one for the DJP, and it's actually the neckline of a potential reverse head and shoulders pattern. Clearly, the DJP has not yet completed the pattern with a decisive breakout. But if it does, with a daily close, say above $46, I think it's off and running. I'd also like to see the ratio move above its downtrend line with a daily close above 1.1. It's calculated by dividing the daily close on the IGE by that for the XLP. Now, we always have to keep our options open in technical analysis. So what would cause me to get bearish? Well, that would be a break below this potential bearish head and shoulders formation at $38. I think the diffusion indicator in the previous chart is telling us from its current oversold condition that this is unlikely to happen. But as usual, let's let the market make that call. If you enjoyed this chart of the month, you may want to go to Pring.com and download a free sample of our Intermarket Review, a monthly roundup of the world's principal financial markets with a special emphasis on the US. We also look at global indicators, bonds, precious metals, currencies, and international markets using ETFs to execute our strategies as much as possible. You'll find unique indicators and intermarket relationships you cannot find anywhere else. In the meantime, thanks for watching and good luck and good charting.